In the latest economic commentary, we again forecast the Scottish economy against a background of an economy which is clearly now beginning to slow down compared with its previous performance, and also slow down in relation to the UK's economic performance. Why is this? Well, it's difficult to be certain the reason for it, but clearly we cannot overlook the impact of the fall in the price of oil, which has impacted very much on the supply side of the economy, probably more than we originally anticipated, because as with the industry, we now understand that this price of oil will stay low for quite a while. And I think originally we were assuming 1 year or 2 years would be the period at which it sat at the bottom. So that's having quite significant knock-on effects into the wider economy, and it's affecting services, business services particularly. And so we see that the performance of the Scottish service sector is very weak compared to the UK, where services are actually driving growth. So overall, the economy only grew by 0.1% in the most recent quarter, second quarter, compared with 0.7% in the United Kingdom. Now, one bright spot in this for the Scottish economy was the performance of the construction sector, which grew very strongly and is seen to be driven by public infrastructure investments, such as the fourth crossing at Queensferry. Now, that is good news for Scotland. I suspect, though, that this will be starting to turn down. And the bad news in all of that is that the private sector and private sector investment is actually quite depressed. And so this is not a good pointer for the future. We also see that the economy is in Scotland affected by the high price of sterling, which I think has had a disproportionate effect on Scottish manufacturing compared with the rest of the United Kingdom. And we see Scottish manufacturing slowing down now for the last 4 quarters. The first 2 of them still positive growth, but unfortunately the last 2 negative growth. And that's now feeding into the wider economy. We also see perhaps that the fall in the price of oil, which should boost demand, raise real incomes, may have had a disproportionate effect on Scotland as Scottish households decided to take the benefit by paying down more debt than their UK counterparts, which we don't have evidence for this, but what we do have is evidence that the Scottish savings rate is higher than the rest of the United Kingdom. The labour market, again, too, is starting to slow down. We see now unemployment rising in Scotland. It's now moved quite a bit above the UK rate. Job creation has slowed down. Looking to the future, we see the usual positive and negative influences. We see positive influences on the economy and demand in the economy through low inflation, the continuing positive effect of the low price of oil, possible benefits from net immigration, the low interest rate regime, which we hope continues, and there's some pickup in wages and earnings. But of course, on the negative side, we have planned austerity, tax credit cuts being a good example from the UK government. We see concerns that if the Bank of England does put up interest rates, that will tend to hit the high household debt households that exist in Britain and in Scotland, and that those with borrowing on variable interest rates will tend to be badly hit. The external position is also concerning. There's some positive influence from the growth of the US economy. The Eurozone is starting to pick up again. We see the world economy is forecast to grow still fairly strongly, although slowing down there. But set against that, we've also already mentioned the high sterling exchange rate, which is impacting on manufacturing. That I think will continue to have a dampening effect on Scottish and British exports. We also see the impact from China of the transmission within that economy moving from a period of emphasis on investment and exports to greater household spending, and the structural adjustments that are required in that economy. The growth of the Chinese economy is going to slow down, and that will affect the rest of the world economy quite significantly, given that now China is the second biggest economy in the world. We're also likely to see effects on external demand through the expected rise in US interest rates, which could occur as soon as next month. So taking all these things into account, we've significantly lowered our forecast for the Scottish economy this year, from 2.5% in our June forecast to 1.9%. And next year we've lowered the forecast slightly from 2.3 to 2.2%, and only in 2017 are we seeing a bit of a pickup from that compared with our earlier forecast. Jobs still be created, but at a lower rate. Unemployment is higher than we originally forecast, but will start to fall. And against that background, we also have concerns about the productivity of the Scottish economy. It's relatively low against the United Kingdom. It has improved, but it's still a major problem for us in terms of long-term growth performance and export performance in particular, which we fear must improve if we're to move to a higher sustainable rate of growth.